Today, I'm going to be sharing with you guys the top 5 option stocks that I'm watching right now as the market is going through a bit of a correction, which for us options traders is creating a ton of opportunity, guys. And if you enjoy this sort of video, make sure to hit that like button, the subscribe button. And of course, I hope you are having an absolutely God blessed day. Let's go over the shoulder and start talking about this. Obviously, the first one, guys, that we are watching is NVIDIA. Big earnings report. The whole economy is being held up by NVIDIA's earnings this week. So obviously, I don't think there's a question in my mind that NVIDIA is going to beat earnings. The question is it going to be enough? Are we going to beat earnings enough to exceed expectations of investors? We've seen it before, guys. Where NVIDIA has fantastic earnings, but we still see a huge pullback across the board. Now, I am very bullish on NVIDIA right now because this morning or last night, they announced a partnership with Microsoft to partner with Anthropic, which I believe is way better than ChatGPT in my personal opinion. So with that said, we are seeing a little bit of green here in the pre-market. I'm assuming that's, we're going into the earnings, which are obviously creating opportunities. But with that said, there are some amazing opportunities with NVIDIA, especially if you're an options trader or specifically an option seller. We obviously have our Bollinger Bands here, which gives us a rough estimate of where a stock is likely to trade in. Obviously, you could see us hit the top Bollinger Band, usually retract. Sometimes we go up over it, gap over it a little bit, and then we start retracting a little bit. And we could see we kind of dip below this middle Bollinger Band area, which I expected us to work back towards this 173 area, but we did not, right? Obviously, that news dropped. We're up 2% right now. I was hoping for us to at least get to that 173 level, but either way, if you're bullish on NVIDIA, selling puts right now on NVIDIA, obviously we have elevated premiums, we have elevated volatility, which is creating opportunity. So I'm looking at things, giving myself time as an option seller primarily. I'm pushing things out. I'm kicking cans down the road. I'm not saying I'm going to buy it today. I'm saying I'm going to buy it next month, right? So I'm looking at things that are, a little bit, less aggressive. I'm not looking at stuff like at the 180 and stuff like that. I'm looking for stuff that's actually, let me go switch over to our normal Robinhood, guys, so this doesn't confuse a few of the beginners in here. The last thing I want is anybody to feel, kind of like confused. So I'm just going to go to the normal NVIDIA options chain here on Robinhood. So here, I'm just going to look at the puts right here. And if you're wondering, that was just Robinhood Legend. I'm kind of been playing around with it a little bit. But I'm usually going out 30 days on this stuff, and I'm kicking the can down the road saying I'm going to buy NVIDIA next month at like a cheaper price. And right now, I think that's a really good opportunity considering the volatility is so elevated. We're on like 24 on the VIX right now. So looking at things that, are still good risk reward. I'm looking at like a 20 to 30 delta stuff. Let's pop open these 175s. Even the 175s, 32 delta, that's actually really high. I'm actually shocked to see that. Let's open the 170s, 26 delta. That's like my sweet spot. And you could see we'd collect a really healthy premium here, a 505, $505 coming from the options buyer. If you don't know what that is credit that's given to you into your account. But for that, we are locking up some money here. So let me just toss in $500 into my cash secured put calculator. All my calculators are free, guys. Just attend the Ark Options workshop. That will be the first link. So you get my trade logs, and you get my calculators as well. So we're collecting $500 on that, locking up $17,000 for about a 30-day time frame. And we get just about a 3% return on collateral. I don't know about you, but that is a fantastic return. Drop the amens in the comment, hit the juice buttons, right? That is a fantastic return on collateral, which is, obviously, right, getting assigned, that's not a big deal if you believe in NVIDIA long term. So the two things that can happen when you sell a put like this, obviously, right, if NVIDIA drops to 170, right, at that on December 19th, right, and it's, let's say, trading at 165, well, you're buying your shares at $170, right? That's the name of the game. However, if NVIDIA is trading above 170 at on the 19th at close, right, you're not going to have to buy your shares, right? You're not going to have to buy your shares. Your contract will expire worthless, right? And then you could run the play again on another opportunity. And obviously, at $500, obviously is given to you upfront, and obviously your numbers will look 100% different. This is a purely educational video on just some of the stocks that I'm watching, right? With that said, obviously NVIDIA, big one that we're watching today. It's probably when you're watching this, you probably already happened. Next one is also important. We're getting a lot of key economic data tomorrow, plus Walmart earnings, which are very, very, very important. Obviously, with the consumer sentiment on, especially going into, especially the holiday season, set up nicely. I would love for it to get back towards its bottom Bollinger Band. I have my fingers crossed that this thing drops after earnings. I'm really hoping if we drop below that 100 towards that bottom Bollinger Band of 99, I'm looking at stuff at like 90s. I'm looking at 90s on Walmart. My goodness, I will totally fine with Walmart, man. This is a great company. Great dividend, right? Fantastic. One of my favorites for the Ark Options Strategy. Let's go take a look at what premiums are looking like right now, at least on Walmart. They're still not super juicy. You could see, right? Like even if the 90s right now, we're collecting $53 of premium, but look at this. Like, so for example, like if I have 90s, I have to lock up $9,000 for that, or I'm getting a 1% return a month. For me, that's not usually the play I'm going to do, but there's nothing wrong with that, guys. Like honestly, like if you genuinely like want to own a stock at a certain price, collecting premium to maybe buy it, I think I love it. I call it my maybe buy it and then maybe I'll sell it strategy, because then even if I buy the stock, I'm able to sell covered calls. Now there's risks on both sides. Obviously, if it's trading below 90, I have to buy it at 90 still. That's a risk, right? That's why I like to do this on stocks I believe in long term, or ETFs that are known to always recover, right? Or if we're doing the call side, where that's essentially where instead of using our cash, we're saying, hey, we have 100 shares of a stock, we're willing to sell it at a certain price on a certain date, maybe, right? So in this specific case, let's say you owned 100 shares of Walmart at $100, right here, right? If we sold the 110s that expire in a month, we collect $90 of premium. Now the risk on that side is you're capping your upside, right? The 110, if it's trading at 115 in 30 days from now, right, you're missing out on all those extra gains, right? But if it's trading below 110, obviously you don't sell your shares, right? And you walk away with simply that $90 of premium. I like to look at it as like collecting a rent check on your stock along with appreciation, kind of like a rental property. So next one, guys, another one. This one's big, right? They are also Palo Alto Networks. You guys know I love the tech sector with my IT background, but this is one of my favorite IT security softwares out there. Don't mind the ads that I'm getting here, guys. But with that said, trading right, hugging that bottom Bollinger Band, really this entire past 2 weeks, really at 200. Obviously, this one wraps up a tremendous amount of collateral. Obviously, doing a put at like a 190 is going to, or it costs you around $19,000 to wrap up, but they are also reporting earnings. Not many people are talking about it, but for me, you guys know I love the IT kind of tech and networking infrastructure sector. That's the kind of stuff I was doing when I was working at a high frequency trading company many years ago, not as a trader, just as an IT guy. Don't think I'm smart enough to be a day trader now. Don't want to send the wrong signals here. But with that said, looking at even the premiums here, I like to be below key averages when I'm selling puts. It's a sense of comfort for me. Is it right? Is it wrong? I don't know. It just gives me a sense of comfort. So for me, I don't want to be selling puts on the high flyers, right? Like that's just, again, for me, when I'm selling options, eventually the time will come when I'll jump into those. But right now, especially on in the environment that we're right now, I'm really trying to get below the 200 and 300 days, right? So I'm looking at the 180s, right? So let's go take a look at what the 180s are looking like. Not bad. I mean, we're still wrapping up a lot of collateral, $275 of premium we're collecting on wrapping up $18,000. Hey, you know what? Still just a maybe I buy it. That's your price, and that's what you're going to get. Now, obviously, you can be more aggressive. The more aggressive you say the 190s, you have a little bit more, right? You have a 31 delta, about a 30% chance of assignment, about a 70% chance of expiring worthless. And you're obviously collecting more premium on this, right? Actually, sorry, this is showing too. You're collecting more premium, but you're always taking on more risk. Never forget that when you're selling puts, you're always taking on more risk, okay? Obviously, the next big one for me, guys, is Arista. You know how much I love this company if you're a follower here on the channel, and I'm just going to keep riding this thing down. That's what I can, that's the only thing I can control, and I'm going to use this as a form of dollar cost averaging. Right now, I'm just waiting right now to see, are we going to work our way down towards our 200 and 300, right? That's insane if we work our way down towards those moving averages for a company like this. That's just me. It's a high conviction stock for me. Go do your own research on this. But I have my own reasons for loving Arista so much. Nice to see a lot of green today across the board. People are getting excited for these NVIDIA earnings. Well, let's hopefully we don't get like smacked in the face in the pre-market after close when they report. But with that said, I'm going to be looking at the hundreds. I want to be looking at stuff below the 200 and 300 day moving averages at that point. Right now, not doing anything with a risk at this today, especially, but I'm watching it, especially after NVIDIA earnings, because listen, whether we like it or not, there's going to be opportunities that happen after, especially Arista, after the reports come out, after Walmart reports, right? This is where the dry powder comes in handy to have. And I know the past couple weeks, a lot of us have deployed a lot of collateral. We're kind of almost tapped out in a sense, and that's fine. That's what makes option selling so great. We don't have to trade. We don't have to, FOMO into things just because other people are doing, right? We're focusing on our own ROI on collateral. And if we're hitting that target, okay, let people have opportunities that they have, right? That's fantastic. But that's why I always like to have at least a 10% buffer for opportunities that happen. All right. And next one is Target, right? Oh, nice to see they're actually up a little bit here not pre-market. They were down like 3.5% in pre-market, almost 4% in pre-market. Nice to see us opening here at 1% up. Man, they missed earnings just barely, right? Just barely. And this stock has been plummeting lately. Just been getting absolutely beat up. Already trading well below the 200 and 300 day moving average at around $90, but I am very bullish on Target long term, and these premiums are decent. Okay, they're not as good as like some of these tech ones that I'm sharing with you guys, but nice to see a nice little rebound here on Target. I did not expect that. I thought just because of even that slight earnings miss that they had, that the market was just going to punish them for it. But even looking at the 85s, right, collecting $181 of premium. Let's see what that comes out to. About we're locking up 18,500 on a play like that, so about a 1% return. Not a great not a great premium, at least in my personal opinion. The time for puts on this bad boy was on the when it was getting beat up here, that when it was right at that bottom Bollinger Band area. That's usually the best time to sell your cash secured puts, and then as we kind of work our way and bounce off that bottom Bollinger Band, not that it always happens, but usually it does, that's when we can close out our cash secured puts, and if we took any kind of assignment along the way or own the shares, then we're able to sell the calls. Guys, let me know what ones you are looking at in the comments. What stocks are you picking up right now or trading options on? Also, make sure you attend the Ark Options Strategy, about a 2-hour long training where I show you this entire strategy in way more depth, plus give you all of my calculators and trade logs completely for free. Click that first link in the description of today's video, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.